Welcome back to FT Markets. The European Central Bank is under a lot of pressure ahead of its meeting this week. The Eurozone's got that deflated feeling, slow growth, very low inflation. The question in markets' minds is, will it now finally embark on a US-style quantitative easing program? With me to discuss its dilemma and what it might do is Trevor Greetham, who's the head of tactical asset allocation at Fidelity Worldwide. Welcome, Trevor.
Hi there.
If you look at our first chart, we can see really how the growth recovery in the recent years, in the recent year or so in the Eurozone has really been very modest, possibly now even going into reverse. Is this why the ECB needs to act?
It is, because there's a lot of spare capacity in the Eurozone economies, and you don't fill that spare capacity by growing at sort of 0.5% or so at a peak of a cycle. Business confidence is starting to dip again, and it feels like this is a peak.
And in fact, if we go straight to our second chart, we can see this sort of quite dramatic collapse, if you like, in inflation expectations. This is what the market expects inflation to be 5 years' time for 5 years. And that little drop right at the end is what's worried the ECB.
It has, and this was referred to in the Jackson Hole speech. So Draghi specifically was saying, the president of the ECB was specifically saying that this was something they monitored closely, and he's set expectations that he's going to do even more than he talked about in June this week. But the question is what?
So what are the options then, Trevor, for the ECB?
Well, the ECB could cut interest rates further, but in June it was pretty clear, I think, that that was meant to be the last cut in interest rates. They're already very, very low. The deposit rate's already as negative as really it can be. It's possible that they will announce further details of quantitative easing programs through the asset-backed program or sovereign bond purchases. Securities. But they've already hinted at all of these things, and they've appointed a consultant to assess the asset-backed market. And it's too early to start buying any of these things, or they can just do what they usually do, and that's talk.
Okay, so what do you think? You think that's what they're most likely to do, just talk?
I think what they'll do is talk, and I think what Draghi will do is he'll say, look, we made some announcements in June. The first of the TLTROs isn't actually starting until the 18th of this month.
That's the long-term refinancing.
That's right. So the first of those hasn't actually been allotted yet. He'll say we've got all these things in train already. But the key thing for him is to give the impression that it's like a central bank that's got interest rates at 5% and can cut rates again if they need to. He has to give the impression there's a lot in the armoury without giving too much away today.
The interesting thing about his Jackson Hole speech, of course, was this: he made the point that governments could do more with fiscal policy. Do you think that was a sign of strength, a sign of ammunition that's not being used, or was it actually a sign of weakness that actually maybe the ECB feels it can't do anymore?
Well, I think there are three brief things to say on that. Firstly, it was a bit of a sign that there isn't much left in the ECB's ammunition belt, so they would need fiscal support. So in a way, it's a bit like saying, don't expect too much from us. Secondly, a quite positive side of it is that the euro crisis dynamics, which could reassert themselves in an economic slowdown, are likely to be dampened a bit if the ECB is saying, don't push austerity again on the south. So that's good news. The third thing, which I think is critical, is he talked about the Eurozone as a whole. He said that the countries are separate from each other. It's important to get all the labour markets working. And the Eurozone as a whole can ease fiscal policy. But we know who that is. It's Germany that needs to ease fiscal policy. So he's really asking Germany to change their constitution and ease fiscal policy. And in the end, I think that will need to happen.
A final question, obviously, what the impact on markets is going to be. As I said right at the beginning, there's expectations that the ECB might do QE. You think that it's going to be just talk this month at least?
It's too early, but I think what he'll need to do is keep the euro on a weakening trend, and the economic data and the deflation and the fear of QE will keep people shorting the euro. And he'll need to keep bond yields down as well by suggesting he could go out there and buy bonds.
And do you think QE one day?
QE one day, but peripheral bond spreads are already extremely low. There's a chart here, so this is a great chart. So this is in case you missed the late 90s convergence trade, it's happened all over again. This is the average 10-year spread of France, Italy and Spain sovereign bonds over Germany. They're back down at 1% spread over Germany. I don't think we're going to get back here again until we've got a United States of Europe and fiscal transfers. There's not that much more to go for, but that's what Draghi will be suggesting, that he can ease policy in the south of Europe by buying the sovereigns if he needs to.
Trevor, thanks very much. So, a few hints there. Lots of talk perhaps from Mario Draghi. Whether we'll get any action, less sure. Maybe the market reaction might be a bit disappointed.